The number one thing for you to focus on for your deferred sales trust transaction, part 3. Hi, I'm Brett Swarts, founder of Capital Gains Tax Solutions, where we help you use the deferred sales trust to defer capital gains tax on the sale of highly appreciated cryptocurrency, businesses, real estate, primary homes, public stock, private stock, save a failed 1031 exchange, all so you can create and preserve more wealth and or help your clients do the same. So we're in a 4-part series, and our first part and second part, if you haven't watched that, I encourage you to go back. The first part is focused on all things timing and all things problems that you're trying to solve, and always remembering the motivation from why you're selling and figuring out if the deferred sales trust is you're even eligible for that. Part number 2 is all things legal, getting the confidence and understanding that the deferred sales trust has a perfect track record, thousands of closes, billions under management, 25 years, face the IRS, all of those things, establishing that legal framework, understanding the legal framework and the legal track record so you can feel confident about part 3, which is right now we're going to be covering all things investments, returns, and fees, okay? So the first thing to understand is what are your options for the deferred sales trust when it comes to investments. And before we even go there, we actually will have you fill out a risk tolerance questionnaire. And so your focus in this scenario is focusing on, how much income would you like? When would you like it? How much risk are you willing to take? What's your understanding? What do you know, like, and trust in investments? And that could be securities, that could be real estate, that can be insurance, which are all options for the deferred sales trust. It could be ground up development. It can be passive or active real estate, and which is one of the best kept secrets with the deferred sales trust is the ability to be 100% passive, not having to do like-kind investment property if you're trading real estate, or not having to be 100% of all of your equity from the sale of cryptocurrency or a business or real estate, be only in real estate. You can do a mixture of all kinds of different investments, again, including stocks, bonds, mutual funds. It could be insurance. It could be investment property. It could be passive or active investment property, which is really, really neat because you as an entrepreneur or as a business owner or as an investor, you might have an outcome for selling here to be somewhere else over here, which involves you being actively owning or managing or running a business or starting a business or a startup company. And that's what the beauty of the deferred sales trust allows you to do. So you want to focus on, again, the outcome, and then how do you get there? And one of the ways you get there is by partnering with the trust and becoming an active owner in an LLC that goes and starts that business or buys that piece of real estate. And so that is a really great way to clarify if the DST is a good fit for you. The second part of this has to do with the returns, okay? And so returns, I like to say, they're typically around 8% net of the recurring fees, which we'll talk about here in a minute. And that is if you're 100% passive, okay? Okay, because some folks who are listening to this, we just did a couple cryptocurrency deals here recently, and they're like, man, I'm used to making a lot more than that. Am I really just capped at 8%? No, you're not capped at 8%. Unless you're passive. If you're 100% passive, you could be capped unless you purchase what's called an option, and this option can also carve out the future upside. But what we found that most people want to be active now and be able to capture some upside right now. So let's walk through a scenario. I had a client who just closed a $2.6 million business in Alabama, and he's building 70 multifamily units in Tennessee, all tax deferred, and he's doing this exact structure. He deferred all of the tax, about $600,000. Then he partnered with the trust, and he's building these units, okay? And upon sale of the units, he'll pay back the trust, which owes him the money anyways. And then the upside, he can capture either 80% or 98%. And so these are all things that we'll walk you through, but you want to focus in this step 3, where and how the funds are going to be invested, and how either you're going to be active or passive, and what those returns can be. And those returns can be 1,000%, and you can get up to 98% of that upside after you pay back the trust. The trust also has a preferred return, typically at 8%. So that's a lot right there, right? And this is part of why we don't want you to focus on that in step 1 and step 2. So if you haven't done step 1 and step 2, step 3 is where we're focusing on returns, we're focusing on investments, and we're focusing on potential outcomes that you're trying to achieve, okay? So now let's also touch on this idea of tax flow versus cash flow, okay? And so for the longest time, we've always heard it's all about cash flow, or cash flow is king. And cash flow is still king, but guess what? There's also a queen, and I call the queen being tax flow. And she, or the government, is looking and is raising taxes because of the challenges that, let's say, that we're all facing right now in America, right? So they're running out of money. The debt ceiling is as high as it's ever been, and they're looking to raise taxes. So not only do you want to manage your cash flow, but you want to manage your tax flow, and you want to try to get these two to line up. And so part of the focus now here is figuring out how to make the deferred sales trust an investment rather than an expense. The first ROI is all about capital gains tax deferral. I'm selling cryptocurrency for $5 million. I would have paid $2 million of tax. I like to have 5 minus some fees versus 3. That's pretty simple. The next phase of this is deferring the income tax. So I have a client, we just closed a big Ethereum case. And in this scenario, he bought it for about $100,000. It went to over $10 million, and he is making a good income. And so for him, it was, I can quit my day job, my corporate job, but I can delay the income until I'm in a new year. And that's exactly what the deferred sales trust can do. You can delay income until you receive it in a new year, which is really nice. And so for him, the ROI wasn't just deferring the capital gains tax, but it was also deferring that income tax, which can lower his overall adjusted gross income on his personal side. So this is about tax flow, not just the cash flow, right? Now, in the meantime, you're wondering, well, is the money building up in there? Yeah, it's kind of like an IRA or 401k. It's building up as the interest is earned on the investments, and it's compounding, right, over time, kind of like an IRA, kind of like a 401k, until he starts receiving it, which at that point he's paying tax, which is also an important part of tax flow. As the income is coming out, you're paying tax. And so what does that look like? Well, that looks like a 1099 that you're going to receive based upon the interest that you received the previous year that you report to your CPA. So you want to make sure that you're focused on connecting with your CPA at this point, making sure that the cash flow and the tax flow are matching up, or at least trying to make it as efficient as possible. I had another client who sold in California. He relocated to Nevada and started taking payments there as he established residency there. Again, he worked the tax flow angle based upon his state that he lives in to maximize his returns on the deferred sales trust, which leads into the third part of tax flow, which has to do with estate tax. I mentioned this a little bit in the previous two videos, but I want to encourage you to look at your overall taxable estate and say, oh my gosh, how much is inside of my taxable estate? And then what's my plan? What's my tax flow plan if and when I pass? And what does it look like for my heirs, right? So a lot of us don't want to think about that. Like, well, let someone else deal with that. But I encourage you to think about that right now, even if you're young. I'm working with a gentleman who has some cryptocurrency over $100 million worth, and he's in his mid-30s, and we're talking about this. This is really serious because upon sale, we can move all of the funds outside of the taxable estate, which can save his heirs 40%, which is a huge part of this ROI and this tax flow situation. So be aware of that, which is estate tax. We want you to make sure you understand that. Now, step 4 or part 4 of this tax flow part has to do with all things depreciation schedule. So one of the best ways to defer tax and or to take money out of cash flow and offset it with depreciation. And part of how you do that is by buying investment real estate, okay? And so I invest in commercial real estate. I'm a commercial real estate broker. This is part of how I learned all about this when I was back at Marcus & Millichap in 2009 and the Deferred Sales Trust. And so that's where 3% of the top 3% of all wealth in America own commercial real estate. And that's why, part of why is because for the cash flow, they can get offset of depreciation, and it can wipe away the cash in that year. And if you're an active investor, you can do what's called accelerated depreciation. And if you're an active GP and you become a real estate professional, which is spending basically about 750 hours materially owning and investing and managing real estate, you can talk with your CPA, make your income go to zero, or income tax go to zero, because the income you're receiving from the trust or other assets and the depreciation can be offset. And so that's like DST Ninja, let's say 3.0. But these are things that we help our clients and or teach professionals, business professionals on how to help their clients make their income tax go to zero by using depreciation off of commercial real estate. By the way, there's an amazing video by Grant Cardone. He talks all about this. If you search like Grant Cardone, commercial real estate taxes, and he goes through the entire whiteboard and he breaks down step by step, I highly encourage you to watch that video and then rewatch it, send it to your CPA, and then get your tax flow plan going right now, because cash flow is king, but tax flow is the queen, okay? So that is investments, that is returns. Now let's talk about fees, okay? So fees, our goal, and we define winning up front as, hey, can we, defer the tax, defer the income tax? Can we earn on this? And can we net 8% net of the recurring fees? Now, the recurring fees are all in somewhere around about 2%, depending on how and where the funds are invested, and depending on the amount that comes in. And this includes, financial advisor, trustee fee. It includes recurring fees that happen with bank, or if you're going into different types of investments, it's about 2%, okay? Now, there's also a one-time fee that's up front by the tax attorney. That's about 1.5% of the gross sales price, okay? So let's take $1 million. Let's say it's $1 million on the sales price of cryptocurrency. Pay about $15,000 at closing, okay? Pay that $15,000, and that's a one-time fee that covers lifetime audit defense, which we covered a lot of that in step 2 of the video if you want to go back and check that out. And then let's say there was $1 million of net proceeds that hit the account, then it would be about 2% on that amount, okay? So no matter how and where the funds are invested, that's the recurring fee. So our goal is to try to earn about 10 to net about 8. And that's on all things passive. And if you go active, again, you have an opportunity to get the majority of that upside if we structure it correctly. And if you are, again, an active investor in that deal. So that is investments, that is returns, that is fees. I know that's a lot to focus on in even just one step 3 video. But again, I want you to go step 1, step 2, step 3, and go in that order. And make sure that you're attending our mastermind every Friday, 10 a.m. Pacific Standard Time. It's the DST Cryptocurrency Real Estate Mastermind. We're talking all things deferred sales trust and how we're connecting the world of crypto, traditional financial advising, and commercial real estate using the deferred sales trust through this tax deferral. Amazing strategy that I'm hoping you are, by this point, feeling great about, excited about. And so you can go to capitalgainstaxsolutions.com and you can register for free. You can invite your CPA, whoever you want. No questions or bad questions. We are there to be of service to you and to make it very simple for you. We have past clients on there. We have strategic partners, financial advisors, real estate professionals, business brokers, M&A attorneys, M&A advisors. We all come on there. We brainstorm. We talk. We clarify it for you so you can feel really great about the deferred sales trust. So again, go to capitalgainstaxsolutions.com. Hey, look for video number 4. That's going to be here in on the next, I guess maybe the next click here, right? And that's all about post-close, okay? So you've closed the transaction. We'll talk about a little bit about closing the transaction itself, and then post-close, what to expect, accessing investment, understanding investments, and understanding where they're invested at, seeing that, getting line of sight, who the banks are, who we work with, all of those types of things. So that's in a video 4. And again, thank you so much for watching this video, and I look forward to connecting with you real